Have you ever felt the gut-wrenching dread when you apply for a mortgage loan? What if I told you there's one fundamental, often overlooked way of you mastering and exploding your credit score to open the doors to better interest rates, your dream home, and quite frankly, your financial freedom? Let's buckle up and let's get into this. Today, we're going to cut through the noise. I'm going to reveal to you the absolute best undisputed way to improve your credit score in Canada. And I'll also give you a few other tips and tricks. And it's in no way some magic loophole or secret handshake. It's something incredibly simple yet profoundly powerful. Stick around because at the end of this video, you'll know exactly how to leverage this secret weapon to your financial advantage. Your credit score is your thumbprint. So you need to get this fictitious number that controls your borrowing ability. You need to control this thumbprint of yours, this thing called the credit score that you deserve to have ranking high. Well, so what is the number one thing that you can do for your credit score to increase? I'll give it to you right now. It is on-time payment history. It sounds basic, even boring, some might say, but I promise you its impact is anything but. In Canada, your payment history counts for a whopping 35% of your credit score. Think about this, 35% of your credit score. So more than 1/3 of your financial reputation hinges on the one simple habit. Pay your bills on time every single time. It's not that hard. Now, every credit card payment, every loan installment, every mortgage payment, if it's reported to Equifax or TransUnion, which is the sort of the little brother of Equifax, these are Canada's two main credit bureaus. In the mortgage world, 95, maybe even 99% use Equifax as opposed to TransUnion, but that's a separate story. Missing even one payment can send a ripple effect of negativity through your credit profile that can take months, even sometimes years to undo. A single late payment can stay on your report for up to 6 years. This is not what you want, okay? You don't want this. Conversely, a consistent track record of on-time payments acts like rocket fuel for your score, proving that you're Mr. Responsible. Let's do this. Why is payment history such a big deal when it comes to your credit score? Because it is the primary indicator that lenders look to access your reliability. It basically tells them, hey, can this person be trusted to pay me back my money that I'm lending out to them? If your history shows diligence and consistency, lenders see how low risk you are. This translates into better interest rates on your loans, higher credit limits on your credit cards, and easier approvals for anything from a car to, you guessed it, your dream home in Canada. Imagine saving thousands of dollars of interest over a lifetime of your mortgage, all because you paid that Visa bill on time. So, conversely, a history of late or missed payments screams risk to the lenders. It screams risk. Now, even if you eventually pay off debt, those missed payments linger on your report for years, telling future lenders that you're unreliable. This can lead to denied applications, sky-high interest rates, the fact that you're not going to be approved with a regular bank and you're going to have to maybe go to an alternative lender that has fees, or worse off, a private lender. Not that that's bad, but the rates for private lending is obviously higher. So how do you go from sometimes late to always on time and truly capitalize on the credit boosting superpower? It's all about strategy and discipline. This is a non-negotiable for recurring bills. Set up automatic payments for all of your credit cards and loans and recurring bills directly from your bank. Even if it's just a minimum payment, ensure it goes out on time every time. You can always make additional manual payments to pay the debt down faster or later, but on time. Make sure that that minimum payment is always done. And that's a piece to increasing your credit score. A second tip is set up multiple payment reminders. Even with automation, listen, errors happen, human error happens. Use a calendar, use your alerts on your phone, banking app notifications, or even the good old fashioned sticky note so that you know that that bill is going to be paid. That reminder is all over your phone, your computer, and those sticky notes. It's a simple reminder of basically getting you to pay that bill on time. The third little way is budget like a friggin' boss. Budget your household like a boss. I've said this so many times on my TikTok channels, on my Instagram channel. I say budget, budget, budget. You can't pay bills on time if you don't have any money. So create a realistic budget that tracks your income and expenses. Know exactly what's coming in, but more importantly, what's going out. The coming in part, we get it. It's one paycheck or two paychecks. We get that. We know that. But the amount of little things that goes out, groceries, kids soccer, this and that and that and this and that, there are so many things. But budget is put it on a spreadsheet. It's the most simple way. It prevents last minute scrambles and ensures you have the funds allocated for your payments. My fourth tip is prioritize credit card payments like it is your wife's breakfast. When money is tight, it can be tempting to prioritize other expenses. But for your credit score, your credit payments are paramount. Think of this like investing for your financial future. If you foresee a struggle in paying your bill or paying your mortgage, contact a lender before the due date. Many Canadian lenders are willing to work with you on a temporary solution if you're proactive rather than you're waiting for that past due notification. Don't do that. Be proactive, call the lender and say, listen, I'm running behind on something. I got injured. I had to take care of my sick kid or whatever the case may be. But be proactive if you are struggling to make the payment. My tip number 5 and my final tip is don't overextend yourself. The easiest way to ensure on time payments is to take credit that you can afford comfortably and manage it. Don't max out your credit cards or take out loans you'll struggle to repay. This ties back to budgeting. Know your limits, stick with them. So, with that said, what are the other things that make up your credit score? Credit utilization, that acts about 30%. What's credit utilization? That's basically how much available credit are you actually using? Do you keep it low? Do you keep it below 30%? Because that's the ideal. But are you always kind of reaching the limit or maxing out the limit of the credit card? The length of your credit history takes up about 15%. So the longer you've had credit opened up and are in good standing, the better it is for you and your credit score. Credit mix makes up about 10%. And that's basically a healthy mix like credit cards, car loans, student loans, and how do you manage these different types of debt? And the last 10%, your inquiries, your credit inquiries. Don't apply for too much credit at once. Each application triggers what's called a hard inquiry on your credit report, which can really ding your credit score if you do this enough times. So, the last thing I'm going to tell you is if you own a home, don't be afraid to get a second mortgage on your home to consolidate the debt. That would instantaneously improve your credit score. Wiping clean, starting from a clean slate, and now you're able to budget because having one payment rather than having 7 different credit card payments that you've maxed out and that you're trying to maintain is much easier than these 7 credit cards. Don't be afraid to talk to an advisor or call me and my team to talk about how can you consolidate your debt if you own a home. And if there's equity in that home, use the equity to your advantage. I always say Equity is like a little lottery ticket that you didn't, if you don't use it to your advantage, it's just sitting there. And if you have a house that has equity, use the equity to pay down your debt. It's simple, it's easy, and it works. It immediately improves your credit score, and me and my team will personally help you to control that spending for the long-term future. That's it for me. See you on the next video.